In today's session, we would be working out another question where we will be preparing the trial balance. The question goes like this: prepare the trial balance of Mr. XYZ from the following as on 31st March 2020. So from the question, we have understood we are preparing the books of accounts of Mr. XYZ. Mr. XYZ is the name of the person for whom we are preparing these books of accounts. And we also saw that we are preparing the date for which we are preparing the books of accounts. It's for 31st of March 2020. And they've given us some items over here, and based on these items we will have to go about with the preparation. And uh, we've also learned, we are also quite comfortable with the format. We saw that on the debit side we will have to fit in assets, expenses. Credit side we have to fit in liabilities and incomes. So these are the things that we have to fit into the format of the trial balance. So let us prepare this trial balance together, and we will just be discussing the items one by one. So in that note, let us prepare the trial balance. So uh, for us to prepare the trial balance, right on top, we will be mentioning trial balance of Mr. XYZ as on 31st March 2020. And we've already learned the format of trial balance. We saw that we have particulars where we will be writing down the name of the ledger account, debit and credit. We will be writing down the amounts. On the debit side, we will be having assets, expenses. Credit side, we'll be having liabilities and incomes. So let us start off with this. The first item that we have is bad debts. What is meant by bad debts? Bad debts refers to debts which has become bad. So who is a debtor? Debtor is a person who owes us money. Okay, so we carried out some kind of a transaction with that person, and that person owes us money. Now, when the person owed us money, we were under the expectation that the person will be fulfilling his obligation on a certain date. Okay, we were under the impression that the person would be fulfilling his obligation on a certain date. But now that the person refuses to fulfill his obligation, we know for sure that we are not getting the money back. Okay? Now that we have 100% confidence that we are not going to get the money back. So this kind of a debt is called as a bad debt. Okay? This kind of a debt is called as a bad debt. So bad debt is a debt uh, uh, where the person is refusing to pay back the money to you. Okay? So that is what is meant by a bad debt. Now what you have to remember is bad debt is an expense for us. Okay, please remember, bad debt is an expense for us. Why? Because we gave money to someone with the expectation that they would be paying us the money back. But now that we are quite sure that the person is not going to pay us the money back, it has become an expense for us. Okay, so that is what is meant by a bad debt. Next is bank charges. Okay, the next item that we have is bank charges. So what is a bank charge? Bank charge refers to the charge that you have to pay to the bank for availing some banking services. Okay, so for example, you may have to make a draft, or for you may have to pay some money for using certain services. You may have taken locker, you may have taken debit card, you may have taken bank statements. So for those kind of things, you may have to pay a certain amount of money to the bank. So that is what is referred to as bank charges. So bank charges is again a expense. All expenses will fall on the debit side. Okay, all expenses will fall on the debit side. Next is bank deposit. What is meant by bank deposit? Bank deposit refers to the deposit that you have with a bank. Okay? The deposit that you have with the bank is called as bank deposit. So bank deposit, what would that be for us? It is an asset. Okay? Bank deposit is an asset. So remember, assets will fall on which side? Assets will fall on the debit side. Remember the mnemonics AELI. Okay? So asset will fall on the debit side. Next we have is what is called as bank OD. OD stands for overdraft. What is overdraft? Overdraft is again a kind of an instrument which is given by the bank, especially for businesses. When businesses when they do not have sufficient amount of money in the bank, they can take like a quick loan. Okay, they can take like a quick loan. It's a facility which is usually given on current account to businesses. Okay, so bank overdraft, that money is what you have to pay back to the bank. Okay, that money is what you will have to pay back to the bank. So that is referred to as so that is an obligation, that is a liability for you. So since it is a liability, it will fall on the credit side. Okay, it will fall on the credit side. Next, what we have is the bills payable. What do you mean by bills payable? Bills payable are basically bills that you have to pay off. Bills payable will it be an asset, expense, liability, or income? It will be a liability for us. Next, what we have is bills receivable. Bills receivable is basically the bills for which we have to receive payment from. So bills receivable is an asset for us. Bills receivable is an asset for us. Next item is capital. What is capital? Capital refers to the money brought in by the proprietor at the beginning of the business, at the beginning to start the business. So remember, whose money is it? It is the proprietor's money, and it has to be paid back by the business. So since it is an obligation for the business, this is a liability. And remember, liability will fall on the credit side. Next, what we have is carriage outward. Now, what do you mean by carriage outward? Carriage outward refers to the transportation cost of finished goods. Carriage outward refers to the transportation cost of finished goods. So, carriage outward, basically the money that you're spending for carriage, for taking goods outside. Okay, so that is what is referred to as carriage outward. So, carriage outward, it is an expense. Okay, carriage outward is an expense free. Carriage outward is an expense free. So, carriage outward, since it is an expense, which side will it fall? It will fall on the debit side. Okay, it will fall on the debit side. Next, cash in hand. What do you mean by cash in hand? Basically, cash in hand is the cash that you have. Okay, cash in hand is the cash that you have. So cash in hand is a asset free. Okay, cash in hand is a asset free. Next, what you have is commission. Okay, now this leaves us with a big question. Is this commission paid, or is this commission received? Okay, is this commission paid, or is this commission received? So since here it is not specified, I will come back to commission a little later. Okay, I will come back to commission a little later. Next, what we have is creditors. Now, who are creditors? Creditors are people to whom we have to pay money to. Okay, creditors are people to whom we have to pay money to, and that is a liability for us. Okay, that is a liability for us. So, liability, it will fall on the credit side. Okay, liability will fall on the credit side. Next item is debtors. Debtors is an asset for us. So, assets will fall on the debit side. Next, what we have is drawings. Now, please remember, what is drawings? Drawings is the money that is taken by the proprietor for the proprietor's personal use. Okay, I'll repeat that. Drawings refers to the money taken by the proprietor for his personal use. In other words, drawing is the money that the proprietor has to pay the business back. Okay, this money has to be paid back to the business. Okay, this money it has to be paid back to the business. So since it has to be paid back, it is an asset for the business. Why? Because business will get that money back. Next, what we have is the okay. So the next, so I think I put it on the wrong side. Drawings has to be on the debit side. Okay, drawing has to be on the debit side. So I'll just quickly correct that. Okay. Now, next, what we have is furniture. Remember, furniture is also as an asset, and furniture has to fall on the debit side. Next, what we have is general expenses. As the name suggests, general expenses. We have to. It is an expense. So any expense, what should you do? It has to be put on the debit side. Some of you are constantly sending me messages regarding commission. Very clearly, when I had touched upon the item, I had told you we will come back to that a little later, and then we will be writing that. So I urge all of you to please pay attention when it's being taught. It simply means that you're missing out on the explanation. This will happen only when you're not paying attention to what is being taught. So I request all the students that they please play focused on what is being explained to you in the class. I told you commission will come back and we'll be doing that a little later. Next, what we have is insurance premium. So insurance premium, what would that be for us? It is an expense for us. Okay, so it is an expense for us. The insurance premium is basically the money that you're paying for taking an insurance. So that's definitely an expense for us, and that will fall on the debit side. Next, we have is opening stock. Opening stock is again an asset. Assets will fall on the debit side. Now, next important item is provision for bad debt. Now, what do you mean by provision? Provision is certain amount of money that you're keeping aside to meet a certain contingency situation. Provision and reserves are money that you're keeping aside for a certain contingency situation. So here, when we say provision for bad debt, it simply means it is the money that you're keeping aside to compensate for your bad debts. Okay? It simply means this is the money that you're keeping aside to compensate for your bad debts. So here, provision for bad debts is the money that you're keeping aside to compensate for bad debts. Now, when you have provision for bad debt showing up in your trial balance, it is the money that you had set aside the previous year. It is the money that you have set aside the previous year. So since it is money set aside the previous year, this will be an income for you. Okay, this will be an income for you. So when we work out further numericals, you'll understand why this is an income. But for time being, please remember, provision for bad debts, this is an income. Next is purchase. Now, purchase is the money that you're spending to get raw materials. So that is again an expense. Then you have purchase return. What do you mean by purchase return? Purchase return, you bought certain items, you're not happy with it, you're returning that item back. Okay, that is called as purchase return. Purchase return is an income. Why is it an income? Because purchase is an income because when you were purchasing items, you were spending money. Okay, that's an expense for you. Now that you're returning the items, you will be getting the money back. Okay, the money will be coming back to you. So that's the reason why this is an income for you. Okay, so purchase is an expense, purchase return is an income. Next item, rent. Rent is again an expense for you. Then so rent is a expense. Rent is a expense. Next item is salary. Salary is also a expense. So expenses will fall on which side? Expenses will fall on the debit side. Okay, expenses will fall on the debit side. Next, we have sales. What do you mean by sales? Sales is the amount of is the goods basically that you're selling. When you make a sale, what happens? You're getting income. Okay? When you're selling goods, you get an income. So incomes basically are recorded on the credit side. Then you have sales return. So sales return, you sold some goods to your customer. Your customers are not happy. They are returning the goods back to you. So sales return is an expense for you. So why is it an expense? Because when they return the goods back to you, you will have to refund the money to them. So it is an expense. Next is trade expenses. Okay, next is trade expenses. So as the name suggests, it is an expense. Okay, it is an expense. Since it is an expense, it will fall on the debit side. Then you have wages, and then wages is also a expense. Okay, it is also a expense. So with that note, we have completed almost all the items except for one, which is commission. Now, we do not know whether it is commission received or commission paid. Okay, we do not know whether it's commission received or commission paid. So how do we figure this out? So remember, whenever we prepare trial balance, the debit has to be equal to the credit. Whenever we prepare trial balance, the debit side must be equal to the credit side. So let's try and total up the debit side with the credit side to see how much is the total. Okay, so let's try and see how much is the total. So debit side is 16,600, and let us see how much is the credit side. Credit side is 1 lakh. Debit side is 1,60,600. Debit side is Credit side is 1,59,400, which means some amount of money is missing from the credit side. Why? Because whenever we prepare trial balance, debit has to be equal to credit. Okay? Debit has to be equal to credit. But in this case, it is not equal. Okay? It is not equal. Also, when you compare, you would see that the difference is 1,200. Now, all of you, please remember, we have not recorded the commission amount. Okay, we have not recorded the commission amount. So, how much was commission amount? If you go back to the question, you would see that commission is 1,200, which means commission has to fall on which side? Commission will have to fall on the credit side. Okay, commission will have to fall on the credit side. So, which means here in this case, commission is coming on the credit side. Okay, now in which scenario will commission fall on the credit side? Commission will fall on credit side when it is an income for you. Okay, so commission will fall on the credit side when it is an income for you. So when will commission be an income for you? When it is commission received. So here, this commission is commission received. Okay, this commission is commission received. Okay, so here we are talking about commission, and here it is commission received. Okay, so here it is commission received. Okay, now had this commission come on the debit side, what would that mean? So commission is an expense. So when will commission be an expense for you? Commission will become an expense for you when you pay commission. Okay, commission will become an expense for you when you pay commission. So when you pay commission, it is an expense. So it will be commission paid and it will be on the debit side. But in this case, we know that it is commission received, and commission received will fall on the credit side. So that is how we found this. So this is how we will go about with the preparation of trial.